Checkout shares of Beyond Meat touching $200 today before staging a big reversal. Still, shares the meatless wonder have been on fire since its market debut last month, now up nearly 600%, boasting a $10 billion market cap. That makes it larger than around 75 companies in the S&P 500. But our next guest says Beyond Meat and a handful of other hot IPOs are about to keep soaring. Let's go off the charts with Chris Verrone of Strategas Research Partners. Chris, what are you watching?
Hey, Melissa. Well, we're watching IPOs broadly. I think this is a very good barometer of risk. And while the S&P is still below the highs of the last 18 months, I like the fact that the IPO index, this is the IPO ETF, ticker IPO, has already broken out above those 2018 highs. So we're getting strength from the riskiest corners of the market. When you look at a longer-term picture of this, I think it's telling. In 2018, IPOs peaked in the second quarter. So before the S&P peaked, we saw the same thing in 2015. They also bottomed well before as well and making new highs today. We think that's a good sign for the broader market. When you look at some of the constituents in this group, so IPOs, the short interest levels are still very, very high, 15% on Uber, 46% on Beyond Meat. So there's still a lot of skeptics out there about this group. We like that from a contrarian standpoint. If you look at some of these names, I think Uber is interesting here. It's been quietly making this series of higher lows over the better part of the last 4, 5, 6 weeks. It's starting to peek its head right near that 45 level. We think it breaks out, ultimately on its way to 55. If you look at a name like a Pinterest, very similar story. After about a 30% decline, starting to put in this really big base up through 24, 25, challenging 28. We think on its way to the low 30. So another example of a reversal playing out in the space is Dropbox, a name that they took 60% out of since the IPO. This has started to bottom. It began in March, carving out a low here, carving out a higher low here, on the verge of breaking out. So another good barometer in terms of risk appetite. These IPOs generally acting pretty well. And then we go to the one everyone wants to talk about, Beyond Meat. What I think is really interesting here, that 200 level, when you look at some trend lines here on the Beyond Meat chart, if we can draw them, you have them basically connecting from the lower high. I guess we're not getting any lines anymore. Getting from the lower high to the higher high, paused right near 200. That was the top end of this range, consolidating here. I think 150, 155 is an area to buy the stock. We expect new highs here, but the broader message is strength from IPOs is reflective of risk appetite. And whether it's Uber, Beyond Meat, a good group of stocks here.
Chris, why don't you come on over, join us here at the desk. Jonah will bring the chair in.
Jonah.
Because Evan is gone.
Evan,
Did you realize that
did you realize
that Jonah replaced Evan or no?
I got to get out more.
Anyway, Chris, so not to pitch you against another technical analyst who resides in the pantheon of technical analysts, but Carter Braxton Worth, our collective friend, has always said that when analyzing an IPO, there's just not much of a history there.
Yeah.
So how do you look at these charts and say the trend line is this for Beyond Meat when it's only been trading since the beginning of May or so?
Yeah, but it's respected these levels. Mm-hmm. You know, if you look at the 8 weeks of history that we have on the chart, every single time it's come back to support, it's held and reaccelerated off it. So until it breaks that pattern, I think we have to give it the benefit of the doubt here. Uber as well. While the IPO didn't go well, it's held every single level for the better part of the last 6 weeks, making higher lows, first at 38, then 40, then 42, then 44. So I have to respect these, and I think the broader message here is when you look at what is typically risk-on type stocks, already as an index making new highs, it probably bodes well for risk appetite broadly and says, hey, maybe this market's in better shape than people think.
All right, so let me ask you, I see your point about some of the skeptics reflected in the high short interest, but on the flip side, don't you have the lockup at some point, which will just a deluge of shares, or that's 4.5 months off, so that's not relevant?
It's certainly in the future, but what I think is curious, none of these were great IPOs to start. I mean, they hit Uber, they hit Lyft, they hit Dropbox. So I think a lot of the bad news or a lot of the
Beyond Meat, though, you can't say that was.
That's perhaps the exception of this group. I mean, Dropbox, they had it down 60% from the high, right? So I think when you look at the majority of these names, they've experienced a tough go here at the start. I've been impressed with how they've responded to that. No question, the lockups, 4, 5, 6 months from now become an issue for these names.
Chris, you're
indicating you think this is a sign of risk appetite and some risk aggression on some level. How about the opposite? How about the fact that, look, May was the worst month we'd had in markets in a long time. June is the best month since January. You can make an argument that this is really a byproduct of people reaching out to grab whatever they can.
Well, I think you can make an argument when you look at some of the valuations these stocks sport. When you have negative interest rates around the world and you have 2% 10-year yields, valuation as a timing tool just is not very helpful to any of us. And you're willing to pay excess valuations to own growth. And these are companies, whether you like the business models or not, they're actually growing.
Yep.
And when yields are low, you go out and you pay for it. So I think that's one of the messages here.
Chris, thank you. Good
Thank
to
you.
see
Thanks.
Chris